Okay, so can you see my spreadsheet?
Yep.
Okay, I know it's not the way you do your spreadsheet, but this is the way I started not knowing anything back in 2021. Okay.
Mhm.
And I kind of do it, most recent at the top. So if you look back in June of 2021, out here in this column, J is my total. So I came out $100 ahead. July was $400 ahead. I lucked out there. Looks like I got assigned BGFV at,
Uh-huh.
at 22 and sold it for 24, whatever. And then August was a good month, 500 there. And then September, 200. A couple assignments here that I lucked out on in October, and then November and December. So I ended up like $2,000, and then I had like four assignments that were in negative, but overall I had like a $500, 594 balance,
Uh-huh.
1,600 anyway. So you follow that, right? That's how I'm
Yeah.
kind of looking at how I'm doing. And then this year, haven't been as active as I would like to have been. Plus, I made a couple mistakes. January $77, February 27. March, I went the wrong way on, so I bought instead of sold. So this was totally just a trader mistake, rookie trader mistake or whatever. The April 700. I'm not sure why that's so much there, but
Didn't seem like many expired on that April.
oh, here, AMC. Yeah, I
Yeah.
got an assignment there. Um, and so 700, then 100, then 100. And these orange ones are assignments.
Uh-huh.
August, 40, September, October, November, December. So lately I haven't been transacting much, but still $1,200 for the year.
Mhm.
However, I've got one, two, three, four, five, six assignments, and some of them are getting pretty significant. So the way I've been doing this, um, like QS, for example, I got to sign that at $25.
Okay. Yeah.
And each time I forgot what you call this, but I do additional calls to try to reduce the cost of it.
Yeah. You sell a covered call against it. And obviously you can't sell a 25 anymore. But yeah, you want to keep selling those covered calls to reduce the cost basis. Where do you usually sell the calls at for a stock that drops a lot? Because that's where
Gosh,
it does get difficult at that point.
yeah, that part I feel like I'm okay. It depends on what kind of return I'm getting back, whatever,
Right.
whatever the market, some of these, like, obviously, let's see, I bought it at 25. Here's the calls I used at 25 again, then 21, then 24, 23 and a half, 17 and a half, depending on the amount I
Yeah.
get back. Like here, I only got $1.34, so that was probably a waste of time. But each one chips away at the cost. So my real cost of this now is
Right.
22.96 instead of 25. But then the stock price is down. I mean, the price of it is down to $7. So,
Yeah, it's down to five now.
oh,
Five.
really? Okay.
Yeah, that's rough.
I haven't
Yeah,
even
it's
checked lately.
hard
So,
because what you're doing makes sense, but unfortunately, the stock just keeps dropping and it's just not recovering at all, or even staying where it is.
mhm.
So the best you could do is kind of play defense there and try to limit your losses as best you can. Unfortunately, like this is not a really great answer to give,
No,
but
no.
when the stock's down so much like that, I try to sell around zero point 0.3 to zero point 0.4 deltas about a month out. And
Huh,
then
okay.
if it doesn't get assigned, keep that premium. At least you lower your cost basis a little more than selling those lower deltas.
Uh,
And then if it happens to touch in the money, at that point you can decide, do you just want to get out of the position at a loss, or do you want to roll it up and out and just keep going with it there at that
uh,
point?
I'm sorry. I'm trying to take notes as you talk here. What
Okay.
was the first thing you said? You might want to take it slow. Remember, I'm still a beginner at this. I'm kind of dabbling. I really want. I'm almost. I'm hoping to retire in a few years, and I
Mhm.
would love to do that. I don't have big hobbies. I'm not a big golfer. I'm not whatever. I would love to do this more. Take it more seriously. Obviously, when
Okay.
I'm not working full time. And so my point is, bear with me.
Oh yeah, that's
Still
fine.
pretty much a
So
novice.
So the one main thing that you want to do if you're in a position like that where it's down almost $20 where you started it at
Yeah.
is you're not going to be selling calls at the 25 anymore. You won't even get filled on it.
Right.
So you're going to have to sell calls below your cost basis.
Right.
I tend to look around zero point 0.3 delta because if you sell a call at zero point 0.3 delta, you'll bring in at least some income from it. And you still have a good chance of keeping your shares. Right.
Uh, Okay, what, can you explain 0.3 delta? I'm sorry.
So delta is the approximate chance of it getting to that strike price at expiration. So right now, QS is of $5.50 about. And if you look at, say, 29 days from now, the $6 strike is about a point. Actually, let's look at $6.5 strike is a 0.28 delta. So that means there's about a 28% chance it will go up to the 6.5 from 5.5.
Mm.
But what's good about that is at least it's paying $20 for the contract if you sold the
Wait,
call at that strike. Okay.
I'm not sure if I, how did you calculate the delta?
I'm just looking it up right now in Thinkorswim.
Oh, do you
You
mind
can do
sharing
it
your
on
screen?
you want to go on your Thinkorswim and I can show you how to find
Okay,
it.
all right, even better.
All right, so go to the trade tab
Okay.
and then type in QS. And then, yeah, you're on the January 3rd already. We want to add more data on the columns there because you only usually see bid, last change, and whatnot.
Mhm.
So click on the layout. It's right above the calls on the left side. A little to the right, see where it says layout.
Yeah,
Yeah, click that. And then you could do the Delta Gamma Theta Vega. That one will show what we need. There you could even customize this to whatever other options you want
oh,
if you
nice,
wanted to see the
okay.
bid and the ask and whatnot. So the main ones you want to look at are the delta and then what you can make for it. If you look down at the delta column on the very left,
Okay,
see it's sick at the 0.27 delta. So that's a pretty reasonable delta. There's still a good chance you'll keep your QS shares, but there's a chance that it could shoot up past it, right?
mhm,
So I like to go a little higher delta just for playing more defense in this case.
okay,
Because if you sold like a 0.1 delta, you're not going to make much money at all. You might make $7 or so.
right,
But if you sell the 6.5 call right now, if you go to the right where it says bid ask,
mhm,
you're gonna on the call side, not the put side. So stay on the
mm,
left.
yeah, okay,
Yeah. So if you go to the bid there, it'll say 0.18.
mhm,
Yeah, so you would make at least 18, maybe $19 off that contract. Not the best thing in the world,
right.
but it's close to 1% on your original money in a month,
Now, you
which
said at least 30, so would I go with the 39 or the 27?
you could do either one, honestly.
Okay.
So if you want a little bit more of that current income and you think that it's still bearish, like there's a good chance it might still stay where it is or go down, then you would want to go higher delta at that point. So that would
I
bring
see.
in an extra $10 in premium,
Mhm.
lowers your cost basis $10. So not
Oh,
necessarily that bad. I
so
think
this,
either one is fine to be honest.
what's that?
I think either one, the 6 or the
Okay,
6.5 is fine.
okay. So does it look like this? do you mind if I go ahead and,
That's fine. Sell one, 6.29. Could do good. So canceled. Yep, it looks right. Selling the call. Yep.
go ahead and
If you
go
want to,
for
yeah.
it? $28.
Yeah, $28. Yeah.
Yeah, every little bit helps. Okay, thank you. All right, this is,
So let's go over what might happen. Let's say QS bounces back up. Okay.
mhm,
So if it closes at $6 and like 2 cents, you would have to sell your 100 shares at $6. And
right,
then suddenly you're down quite a bit in the end from your initial position
right.
because you bought at 2,500 and you're only selling
My,
it for about $610 or so.
my cost base is $22 and I'm selling
Yeah.
it for 6. Yeah.
So you're still at a pretty significant loss there,
Mhm.
but just be aware of that. Things that you could do instead, if you want to go back to the Thinkorswim tab. So let's say it's getting really close to that $6 right at expiration.
Mhm.
You could either get out and just let it lose your shares, just take the loss and move on. And
Mhm.
sometimes that might be the right case. You could decide to buy back the contract, possibly at a little bit higher than you sold it at, but then sell a new call the month after that. So you could sell it for like February 17th. That's essentially rolling the option.
Oh, yeah, yeah, okay.
So if you don't want to take that full loss of, about $2,000, you could try to go up with the stock, hopefully going up too. So essentially you'd buy back the original contract and then you would sell a new one even higher than the $6 strike. Okay.
Yeah,
Because
okay.
we obviously don't want to sell at 6 if we had a choice not to.
Right, that's, if you have a good feeling that the stock might be going up, or you're just
Yes.
saying regardless?
Yes.
Okay.
So yeah, that was the main strategy with that. With other positions, what we should start to consider are what are some stocks that you might want to own for the long term and don't mind it dropping so much. A
Okay.
lot of these positions that I do, I try to get out of them early with that 50% or so profit, right? Like if I could take in, say, $25, I'm going to close it around $10 to $15 because I don't
Mhm.
want to be holding a lot of these shares. So you should consider doing that with certain stocks as well, where even if it does drop a little bit, I'm still really liking the company, fundamentally it's growing and pays dividends, stuff like that.
Yeah, except I don't have a good feel for that. I don't, you know, I'm not an active trader. I don't keep up with the stocks that much. So how would I
Yeah,
know?
I mean, that's not even more active trader. That's more like fundamentals
Yeah,
on the companies. An easy one to look at to start with are the dividend aristocrats list or
okay,
the dividend achievers. There are a bunch of lists, and I'll send them in the chat here. These
okay,
are all companies that have increased their dividends for at least 10 years, some 25 years. And in general, if you're growing your dividend every year, they're pretty stable companies because they could not only pay out that money to the shareholders, they could also grow it over years and years. So if you look in the link in the chat, there's a list of the 25-year or more growth companies and growing their dividends.
got it.
Now, the actual premiums you would receive from these are not necessarily as high as the ones we do, but they're more stable, like blue chip type companies. Like you can see there's McDonald's in there, Lowe's, Walmart, Pepsi, stuff like that.
Mhm.
So there might be a little bit more fundamentally sound, and then you wouldn't mind necessarily holding them. So
I see.
you should
Uh,
start brainstorming a few of those stocks, and then I could go over how do I look fundamental, like a quick analysis on them, and see if it's something you might want to do or not.
would you know just by quick glance, like, GoTo, for example?
Go to is really tough case. I don't think there's
Okay.
much you can do on it. No. It's at
Okay.
385. Okay. Yeah, you might have a shot. What did you buy it at? 750?
It's where my cost basis is $7.06 now.
That's not too bad. Okay. It was a
Six.
lot worse.
Yeah, it was down to $1.31.
Yeah. Okay. Are you currently in a sold call on it, or you just how?
No,
Okay.
no,
I would go to go to Thinkorswim and let's look at the
here's my
29 ET
100 shares. Okay. And go to where?
trade tab. Type go to over there. All right, so you are down in the position right now, but we want to take in a good amount of income, and we also want to possibly still hold the shares and keep selling calls as it goes up. What strike do you think would be best for that? There's not necessarily a right or wrong answer here. Like
Okay.
it's more based on your risk tolerance and preferences.
Right. And part of it, I just don't know. Part of it wants to just clean up the sheet here. It's been out here for so long, and it's
Yeah.
been consistently going down by it going up to 3. So since August of 2021, it was $2.09 all the way down to $1.31. The fact that it's up to 3 makes me want, I don't know, makes me think it'd be a good time to cut my losses. I don't know.
It might be right. I mean, if I go to the trade tab, maybe you could sell the $4.50. You'll be bringing in a good amount of income in a month off it. And then it would be a loss in the end, but there's a chance it may not get to 450 in a month anyway. And then you're bringing in, you
Oh, I
know,
see. Instead of just selling it outright, go ahead and continue to see if
yeah,
I see if I can tolerate a 4, pay 7, and buy it for 7 and sell it for $4, then
Right.
do this call, right? Is that what you're
Yeah,
saying?
because you're bringing in $62 or so in
Yeah,
a month, which that monthly return is really good from where you initially bought. So if you initially
right.
bought it at 750 and you're making $60 off it, you're getting almost 10% on your money in a month, at least for this month.
Okay, so that's what that would look like
Yeah, I
at
would start at 62 because that's the mid price. And
62.
then, yep, and then I would wait. You could confirm and send that. If it fills right away, good. If not, maybe wait a minute or two and then go down to 61.
It
And you have
filled.
so you have to get $2 extra from that, which is good. You always should start at the mid price where it had
Okay,
those two values that had 60 and
yeah,
62 there.
yeah,
Always
got
start
it.
at the higher one because you never know. Maybe you get an extra few bucks.
Yeah, yeah, that helps.
Doesn't fill, then I would wait a minute or two and then change it $1 less. And
I
maybe
see.
it'll fill then. Wait a few more minutes, another dollar less. I do that quite a
Right.
bit, and sometimes you get lucky. You might as well. Every few dollars helps.
Absolutely.
What other positions? BKKT?
QS, we talked about, yeah, BKKT. Any
What's
thoughts
your
on that stock?
what's your cost basis?
I bought 200 shares at, it's down to $7.84 cost now.
Yeah, it's down so much though.
Let's see.
It's down so much on the options chains are dead. This one is pretty much a loss, unfortunately.
Mhm.
I don't think it's even worth it anymore.
What would you do if it was yours? Do you
I
just,
would sell, I would unfortunately just sell my shares and get out.
okay,
Because you could sell the 1.5 in a month and make $10, but
mhm,
not really worth it.
right?
Eh,
So, you're saying here, I would go to BKKT.
I would just sell my shares. It's up 11% today at least, so at least you have that. But yeah, I would cut my losses there, unfortunately.
So do this, click create closing order, sell 200.
Yeah. Not everyone will work out, unfortunately. But
Yeah,
now that
right.
does give us an extra like $300 in buying power.
Okay. Does this look right to you?
Sell 200. Yep. Yep. It'll sell. It should do it automatically, I think. Yep.
Okay.
Yeah, unfortunately, that's just when you have to take your loss.
Right, right. I understand. I'm realistic enough to know I can't win everything.
Yeah.
And I've, tracked it along. And just so you know, I've been involved in other things before, and they're hot when the market's hot. And
Yeah.
then you think you have something and you sink a bunch of money into it, and then you get, hurt. So
Yeah.
that's why I kind of took it slow with you for a whole year. And I've seen enough that I really like what I see that's kind of long-term stuff and
Right.
realistic. And I don't know. So,
It's good, but
uh,
we should do, I think you should probably do more in the like ETFs, like IWM, SPY, and the futures instead of doing all of these. Like, it's fine doing what you're doing, but
mhm.
I think having a little bit more diversification and keeping it a little simpler with just the like MES futures, for instance, and
Yeah, say
certain
that again. What diversity, what are the examples you gave me to
um
diversify to?
so the futures way is the easiest way to do it, where you can look at the MES futures market.
Okay,
You would need to be apply. You got to apply for futures approval to do it.
okay. We'll talk about that in a minute um, because we want to talk about the future stuff too, but you have a full hour to,
Yeah, I got another meeting at 12 though, so I could
yeah, me
talk right
too.
until 12 and then I have to stop. So
Okay.
yeah, we could do
All right.
another Zoom right after. This will only last 30 minutes, so I'll just add a new one right after.
What's that?
This Zoom
Oh,
lasts 30 minutes, but I'll just
oh,
add a second Zoom right after it. So just check
oh,
your
okay. All right. All right. I appreciate it.
yeah. But then
Sorry
I'll
about
do
this.
stop it right at 12 because I have a second person.
Yeah, same here. I have a 12 o'clock hard stop also.
Okay.
Um, anyway, but this is really helpful. I really appreciate it. I mean, I know I could have read this and you've sent enough documentation, but
It's
it's
okay.
really so much helpful to see it and actually do it with you. This
What
is really
else do you
great.
have? BB, BlackBerry?
Yeah.
All right, BlackBerry at
Yeah.
8.
Bought it at 8, 200 shares at 8. It's 753 now. 753 is my cost.
So again, type in trade BB.
Okay.
Probably have to be a bit patient on it, and yeah, again, main goal is to lower that cost basis. Keep trying to chip away at it, lowering
Yeah.
down the average.
Refresh my memory here, 753, so what would I be willing to take a cost at? And you said delta of at least 30, right?
Yeah, I would probably look at the 4 strike. If it's
Okay.
a little too close, you could go 4.5.
Yeah, if you don't mind, I'm gonna, and then in between number, look at between 7 and 10. Oh, this is saying a buy, right? Why is that?
You want to sell it.
Yeah. How did it? Last one, it came
When
up
you
bottom.
click on the bid, it goes to sell. If you click
Oh,
on the
okay.
ask, it goes to
Alright.
buy.
Uh, 4.5. Okay.
No, click on the bid next time.
Oh, bid. I thought I did that.
The second column there. Yeah, there you go. Yeah, you want to sell. Did you have 200 shares? Yep.
Yeah.
So let's try $8 first and see if it fills.
Up to 8 like that? Is that what you
Yeah,
said?
start at the mid every time because it might.
Oh, yeah, yeah. Okay. Let's
Yep, you got your 8.
Should have gone for 9, shouldn't I?
No, it probably wouldn't have filled because it moved right after you clicked it.
Oh,
You
okay.
see now it says 0.09.
Yeah, right, right.
It happened to do it like literally the minute after.
Okay.
All right, you have XOXL too.
Yes. It bought it at
47.
47. My cost now is 39.94.
Yeah, that's gonna be a tricky one too. I would think this one you would probably still want to keep selling calls and wait for the rebound because
Okay.
it could dramatically move up pretty quickly with the semiconductors, like if the economy starts to look good again.
Mhm.
So I'd want to keep my shares most likely. I would look around the 11 or 12.
Let's see.
Sell the call around 11 or 12.
So I need to move this beyond 14 strikes because I don't see 11 or 12
Oh yeah,
there.
click on strikes all. I usually leave the default as strikes all.
Okay. And what number were you saying to look at?
I'll start looking around the wait, 1 month out. I'll look around 13 or 12.
Okay, even though the delta is,
Yeah, I mean you could go, I mean 12 deltas, the 12 strikes is 0.22 delta, which is reasonable. If you go to 11.5, that's fine too.
yeah, I like 12.
That's fine. Yep.
How many
28
did I?
fill. Yeah.
Yeah, I gotta see. Oh, only 100, yeah. So.
Yeah,
And you said
28.
20,
Yeah, it's already there. You might as
already at
well.
29, yeah, okay.
You could attempt 29 and probably wait, but it's not even really worth it.
Right, go ahead and try it.
Hmm?
Okay.
You're getting your fills. That's good.
Yeah. All right, next one. SIGA just happened, so I can wait on that one a while, I guess. Actually, while you're here, I might as well do a call. It's 10. It's 966 is my cost.
There's not
SIGA.
many options available on this stock, unfortunately. I would just sell the 10 either for January or even February.
Hmm. Let's see if I do it 10. Okay,
Yeah,
2
you
for
only
Jan.
get $5 off it. So
Is that even worth it, do you think?
I would go out to February then, and then at
Okay.
least get $10. It's pretty much the same return anyway. Just an extra month out.
10. I forgot already what. 10, is that
Yeah.
any better?
Yep, see if it fills. It might. There's very little open interest.
Oh, I see.
Not many people are doing options on it right now.
Hmm.
Yeah, okay.
Okay. All right. Well, I know we only have 6 minutes left, but that really helps because I don't, learning how to manage these, I'm not sure, but hopefully what you see here is making sense, right? To continue to
Yeah,
just chip away at it and reduce the cost.
right. And you're doing
And
good
then,
data. It's a lot there, but yeah, it's very detailed. So that's good.
all right.
That's what works for you, you know?
Yeah. All right. Next thing I wanted to go over was how to set stops and alerts on the trades. And I don't know,
Okay.
6 minutes, I think we have enough time maybe to at least
I'm
do
gonna
one.
do a new Zoom. We're gonna add a new Zoom in there. I'll show you real quick and then we'll add it on. Go to your Thinkorswim.
Okay. So this is, yeah, okay. All right.
All right, let's say you wanted to do the credit spread that I wrote there.
Yeah. Let me
You're looking
refresh
at
my memory.
yesterday, the one that I filled for today.
Credit spread for AMAT.
Yeah.
Okay.
Yeah, let's try to do this one. It's only $500 of risk. So you're not gonna necessarily risk, and you're not gonna lose that much either.
Mhm.
So go to AMAT. We're looking at the, yep, 29 DTE at 87.5 and then 82.5. So you're gonna go to the put side on these.
87.5, 82.5.
So you want to go to the 87.5 on the bid put side. Still says 1.7. Wow, did it really move that much? Hold on. I wouldn't want to wait.
Okay.
Dropped a lot today. I probably wouldn't want to do these strikes anymore.
Okay.
Oh
Just
boy. Yeah, that's really close. It dropped 9% today. Let me
mm,
look at a better pricing on that. I didn't take that trade, luckily.
mm,
I would go. I'm looking right now on my end here.
okay.
I would go 80 and then 75. So if you're considering it, I would go to the 80 strike. You want to click the bid on the 80,
I did. Yeah.
and now you want to go to the 75 put. Yeah, one. Go to the 75 put and click on the ask, but hold the control key down. So go on your computer, hold down control, and then click on the 75 at, you click 77.5. You could change that. Go down to where it says order entry, change it to 875. Yeah, right there.
75. So I'm going to buy at 75, sell at 80.
And then you
But
want to buy one of them.
are they supposed to be are all green? Both green?
Now it should be regular. What? Press enter, maybe?
Press enter.
Yeah. This shouldn't be back ratio, but click on back ratio again. It should change the vertical anyway. On the very left where it says spread, click vertical instead. Yeah, that's
Okay.
better. It's not a debit though. You're selling. It's a credit. Yeah. So that's the right way to put it in. What this means is you want AMAT to stay above the $80 strike
Right.
price, right?
Right.
But if it goes to the 75 strike price, then we would be losing the full difference of those numbers, which
Hmm.
is five or $500. Okay.
Okay.
So that we don't want to do. However, we're going to put that alert price in. So if you're ready, you could put this order in and see if you get your $34, which would be a good return off your $500 that you're risking.
Okay.
Good. You got your $34. Now here's how you do the alert price.
Okay.
We're gonna change the alert price a little bit because your strike was lower than what I alerted it at.
Okay.
Right now, we're at 96. The alert at 93 is too far away from your strike that you just did.
Okay.
So we could make an alert, let's say an alert at 85,
Okay.
which is a little bit higher than our 80, okay?
I thought the alert said here,
Yeah, but we're switching it because you went lower
93.
in your
Yeah,
strikes.
okay,
So
okay.
don't worry about what I wrote there.
Okay,
See where the price is? It says 96.14 on the top. You want to right click that, and then click create alert. The little bell, yep. We're gonna have the price at or below. So where it says price is, you can leave
oh,
it at or below, and then we're gonna put the alert. In this case, let's make it, you can just type it in 85. Normally you would put in whatever I typed in
yeah,
earlier,
right.
but since
I found
since it's down 9%, we're changing it.
it.
And then click create. You could also, oh wait, before you click create, that's
Oh,
fine.
sorry.
You could set up the different notifications where it could tell you a text on your phone. It could send it like an email. There's a lot of different things. So if you go to notify with, yeah, there.
Mhm.
Right now it says it'll play the bell sound and it'll send you a little text on your phone too.
Oh, will with, okay, good.
It
All right.
says send push yeah, right there.
Yeah, okay. Oh,
So,
awesome.
so that's good. Like if you're out and doing something else, you're not near your computer, and then suddenly the stock goes to 85, at least they'll tell you on your phone. And then
Right. Yeah.
at that point, I would usually just get out of the trade where I'm just gonna buy back the 80 and sell the 75. I'm essentially doing the reverse. Okay.
Oh, okay. Reverse.
If you go to
Hold
your
on, let me make
if, if I'm going too
it.
quick, sorry.
Uh,
If you go to your
uh,
monitor tab, you'll see the current contracts.
I can just note, and you said if you do get the alert,
I'll probably I'll close the trade out.
which is actually just reverse
Yes,
what you put in.
because you don't want to lose the full $500. That would be
Right.
a big discrepancy. That's like taking pennies in front of a steamroller where people just like wait it out and hope. So we don't mind it dropping a little bit. If it drops to like 86, 87, we're still perfectly fine, right?
Right.
Drops to 85, that's where you're like, I probably want to be a little safer here. I'm just going to get out of the trade. And it'll be a
Okay.
loss, but it won't be a dramatic loss.
Gotcha.
So go to the monitor tab. Yep. You're going to see your position, the AMAT there.
Okay.
And then it'll say the prices of each particular option. So the trade price is what you essentially bought the 75 put and it cost $32 for that.
Hmm.
You sold the 80 put and that cost $66. That's what you took in.
Okay. Right.
If you subtract those 66 minus 32, you took in $34 of a net premium.
Right.
Now, as let's say AMAT stays where it is at 96, it doesn't move up or down, just stays where it is the rest of the month. These options will both start to decay, right?
Hmm.
But eventually you could essentially take in that full premium. Because if it stays at 96, both options will be worthless
Worthless.
at
Right.
expiration.
Right.
You collected the full $34.
Right.
So most of the time I just do that. I just wait. I just
Right.
let the days go down. And then if I could, I just let it expire worthless. Sometimes I would buy them back at say $5 though, just to get out of the trade if it's getting slightly close, but I know I could profit say $30. I might buy both of them back for a net debit of $5.
I see. Okay.
The way to do that, if you wanted to, click on the 75 put that you're at right now, and then press control click on the 80.
On the 80.
So go
Oh,
down to the 80, hold control, and then left click. That highlights both options, okay?
okay.
And now right click it.
Right click down here
Just
or on
like
the
the
line.
yeah, right click it. Create closing order. And then you could buy back your option, okay?
Okay.
Like you wouldn't want to do that right now because it's pretty much
Right.
the same price. But if it
Right.
says buy to close at say 0.05, you might want to do that because then you just locked in $30,
Hmm.
which would be a really good return on $500. We're looking at 6% on your money in a month,
Yeah.
which is really
Yeah.
good.
Yeah. I I keep forgetting to think about it that way.
Yeah, so I would consider doing a few of the credit spreads in general
Mhm.
as you like get more comfortable with them. You're only putting up to $500 in the trade, but you're not going to lose 500 either. We're going to stop out way before that.
Right. No, I like them. I've been doing them. I just didn't know how to put stops and
Yeah.
alerts on them.
So
So,
I don't put the stop at 0.75 on these because you might get stopped out with a bad rogue trade where another person just puts in a weird bid. So that's why I like just doing the alerts. Whatever the
oh,
alert
really? Okay.
price is, that's what I do.
So when you put these stops in here on your emails, just kind of ignore those, and
Yeah,
just focus on the alerts.
yes. Some people
Okay.
still like seeing the stop price. That's why I'm putting them in, but I
Mhm.
like just putting the alert price.
Okay,
And
great.
then if it touches the alert price relatively quickly, like if it touches it the next day or two, the 93 in my case, I would get
Mhm.
out of it right away.
Yeah, yeah.
If it
Okay.
touched 93 with only a week left, you're still good on the trade. You might just close out at a slight profit or just watch it carefully and maybe get the full premium.
Right. Okay. Are we about to expire or
Yeah, I'm gonna
soon?
start a new one up. Okay.
Okay.
So check your
Uh,
Discord.
all right. Just close out of this one.
Yeah, you can close